Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. It is Wednesday. It is August 28th. Over here at Tackle Trading, another day hanging out in the trading range with plenty of movement, gapping down on the open and buyers stepping right in and really claiming the day. Of course, we've done nothing. We're still in the middle of that trading range as per usual, right? That's the new norm. And welcome out, Joel. Great to see you. Welcome out, everybody. Hope you had a great day, both in and out of the market. Hey there, Jimbo. You back home, Jimbo? Or are you still on the road? And good afternoon, Patricia. Always great to see you. Yeah, we're still in the range. Nothing new. So some interesting names on the earnings front going into tomorrow. We've got Best Buy and our Dollar General and Dollar Tree coming out here tonight, and H&R Block and PVH Corp coming out here tomorrow. So some interesting names over in the retail space coming out here this evening. Retail continues to perform well. Another big day for Home Depot and Lowe's and Target, Urban. Some of the beat up ones, not all, but a lot of nice movement and a lot of good overall movement off of today's lows here. And welcome out, Ilka. Great to see you. And there you go, Jimbo. It's probably warm in Vegas, I would imagine. So taking a look at the open gap down. Sold, quickly, but really quick, right into the trading day. It wasn't going to happen. Nice hammer formed on that 15-minute chart, and really just a drift to the upside all day long. Now, if you know what that means, more power to you, I guess. We're still smack dab in the range, seeing plenty of movement, plenty of back and forth, but yet again, we go nowhere. We just hang around within this broader trading range. We're moving a lot, right? We're moving around 50 points a day in the S&P right now versus around just over 30 back in July. So we're definitely moving and shaking, yet going absolutely nowhere. Nothing has changed in my mind. 2,800 still our primary support zone. We've talked a lot about all of the goodies there. 50 weekly, 200 daily, big round number, breakout points, not quite lining up with the floor, but close enough as far as I'm concerned. That's a big floor in my mind. And on the other side of it, smack dab between the 50-day moving average. So just another day in the sideways paradise that is the market. Of course, this type of market, we all know the drill by now. Most of these indexes do the same thing pretty much every single day. Today is no exception to that big, strong movement on the Dow. I think the big thing is we saw some things hold support today. We looked at the banks, we looked at the industrial sector. So many things were hanging at support. And, that break could be ugly, right? But we were actually able to hold support, broadly speaking, throughout the market here today. Dow Jones, same as always, stuck in that range, really very similar to the S&P. You kind of can rinse and repeat with the 50 and the 200, even though the numbers don't quite line up. I do believe that we're kind of in that range right along with the 50-day moving average. Not quite as pretty on the NASDAQ. Dow Jones certainly the big winner of the big indexes here today. But most importantly, kind of holding that trend. Every day that we hold that trend, I think that little line becomes a little bit potentially more important. Right now, that's going to put us right just below 7,500. Of course, our swing is really the major support level, and that's getting awful close with a little bit of more time passing. Going to put us really close to that 200-day moving average. And welcome out, Whitney. Good to see you, sir. Hope all is well in your neck of the woods. Still, I think you have to like it overall a little bit more just because we're putting in those higher lows, but I don't think you can say that it's that much stronger or weaker, maybe if you're seeing it the other way, than our other big indexes. Of course, the big story of the day is the rut, at least for one more day, holding support, much like the market. Right out of the gates, did stick our nose below the lows from yesterday, not by much. 1450 holding here today. Support zone still very, very important. We win. Support's tough to break, right? We say that a lot because it's supposed to be true. So there you go. Yeah, one of these days, Joel, we're going to break one way or the other, and that is going to be interesting. I don't mind now that we're kind of getting used to the range. It's been a really good market for the day traders. I'm not really one of them, but I know day traders love these market conditions. Cash flow traders, as long as we're really building outside of the trading ranges on the major indexes, they've been, back and forth ride, but support and resistance continue to hold for the most part. So now that it's kind of the new normal, so to speak, it's all good. Of course, that means it'll be breaking tomorrow, right? So, but yeah, one of these days we are going to pop one way or the other. That is, there is no two ways about that. Sooner or later, we will get some technical clarity. What will it mean? Well, we will have to see, but for today, we don't have to worry about it, right? Another day in the sideways range. Obviously, we've got to keep an eye on this support zone on the Russell, but it wins today. It wins today, just like it's won over and over, no matter how bad it looks. It's constantly been enough of a reason for the bulls to step back in. We'll see if they can continue that momentum. Fighting the good fight, though, you have to respect that upward movement off of that support level. If the market was, breaking resistance, and we were seeing that if the S&P was breaking resistance, that might be really interesting. But alas, we are smack dab in the middle of the range. Major, for the most part, our sectors overall were up here today, including our aggressive sectors. Nice bounce back day for the material sector, but it's going to have to reclaim those short-term moving averages. It's going to need to reclaim 56, this trend line at the very least, before it has my attention. I was thinking out loud, kind of, on our friends over in Air Products here today. You see this breakout, which is still very much on the table, in my personal opinion. Probably not going to have to make any decisions on it this week from the looks of things. But now, we've kind of broken down. We saw this trend line start to develop last week. Now we've kind of started to see, a little bit of turnover. Now, I don't think it's enough, but I think a very, very aggressive trader could argue if we started to see some downward movement here, expect more of it, at least until we work into support. Now, I'm not there yet, but just being able to say that is a little bit of a concern for the material sector, because as we all know here by now, this has been very propped up. In some ways, it's been propped up by things that by the big guys holding up, right? These are some of the biggest components of this ETF. Echo Labs, Sherwin-Williams, Air Products, those are some of the biggest holdings. Nice bounce back day on Sherwin-Williams, by the way. Goodness gracious. I guess we should have liked that pullback. We talked a little bit about it yesterday. I should have liked it more, I guess. Really good, solid movement. But on the other side of things, it looks more like bearish retracements. Now, these were good candles, but not particularly strong volume market wide, and generally speaking, obviously, so I'm sure there were some great moving volume stocks today, but these are going to look a lot more like potential bearish retracements, on PPG, on the LYBs of the world, on the Dow at DuPont. We're hanging out right at a support zone. Dow at DuPont here, you could very easily argue is on the door of a breakout. Dow, of course, has been breaking, but looks like a lot more of a bearish retracement situation that we're seeing right now on these upward movers in this space. So again, I think we still have to stay skewed to the downside. Personally, I'm not going to fault anybody for trading into strong trends ever, as long as they're comfortable with what the market is doing as a whole. There are still some things out there, but as we've talked a lot about this last little while, they're not there. If we run into this trend line, let's look for some bearish retracements. It's kind of my thought process. This is probably going to take us into next week. If it happens faster, it probably won't be the textbook setup that maybe we would like to see. But if we can run back into those short-term averages, that trend line, start to see some turnover, I'll definitely be taking a peek at some of those downward trending stocks as potential bearish retracement candidates. Again, we've got to reclaim quite a bit of stuff. We've got some work to do before I think we can be bullish overall on that sector. Energy, whoops, I went to the wrong list. There we go. Energy, I hate when I go the wrong way. Energy held support, and it was a good day. We had a nice pop on crude, working right in that trend line that we've been kind of watching as of late, as we'll see when we get to crude. But it definitely helped relieve some of the selling pressure that we've been seeing here in energy for quite some time. And welcome out, Scott. Great to see you as always. So kind of holding our own here today. Again, if you believe this is the bottom, you are certainly entitled to your opinion. You very well may be right, but I don't believe the technicals back that up whatsoever. I don't think it would be a bad thing, though, to spend a little time consolidating before breaking down. That wouldn't be a bad thing in my mind at all. Certainly, for me, we need to break back above resistance before we can really be talking on the bullish side of things. For the most part, nothing really changed. No, we did hold support. You have to give support its credit where it's due, but that's about the only bullish catalyst that, from a technical point of view, I think we can argue right now, still below everything. Fighting at support makes sense, right? It's maybe not the same level of support that we have on the rut, but it is support nonetheless. So I'll still be looking at this from a bearish perspective, looking at it, potentially. I'm going to prefer breakdowns overall to retracements because we've held support, at least as of today. We've held support. Wouldn't mind seeing a little bit of sideways action develop. I'm going to switch my list so I don't drive myself crazy going in the wrong order. And I'm going to have to delete one of these lists one of these days. As we move into financials, the big story was the banks holding support, at least for one more day. We've talked a lot about it, and I think it really matters to the market overall, and certainly to the ETF for the financial sector. Nice movement too. We didn't just hold. These were some of our nice movers here today. Still, again, we've got work to do. We could bet on support holding, and that's fair, but that's about the only thing we really have going on for us. But we saw it kind of across the board. Bank of America, nice movement in Wells Fargo, which is, actually kind of showing maybe, some very subtle and very early potentially signs of reversal if it could break that previous swing high. So we really saw a good bounce back on the banks. Who do we see interesting? We still got CME knocking on the door of a breakout over on the exchange side of things. Not much movement here today, but still fighting the good fight up at that resistance level. Saw some nice movement on CB as well here, coming out of this little bottom that they've shown. On the other side of it, it's those banks still very much are bearish breakdown candidates, in my opinion. Today's price action may make it harder for them to break that support, but that might make me like it even more if it does break that support. We will have to see. I do think we need to be careful. I do think we have to respect the nature of the banks, to all of this rate stuff. They are definitely one of those areas that I think we have to be cautious with. Still a lot of work to do. We need to get back above the 200 at the very least, but we've got resistance at 28 or 2680, another pretty good resistance level at 27. So we kind of need to see a little more turnaround. For me, I'll still lean on the more defensive sectors during this particular market from a directional point of view, at least. I think that continues to be the right area to focus on, right or wrong. So over in industrials, much like the financials, really held our own here today off of that support level. So I think that was probably the biggest story, is the support holding in the industrials and the financial. That's why we saw, the Dow, one of our better performers here today. We've still got plenty of work to do. We've got CAT. We looked at these guys yesterday, kind of sitting on an old support level, as well as that 200 weekly moving average, with not a whole heck of a serious lot for another, down into $100, I would say. So a big fight going on over here. Our friends at LHX, still, again, defense continues to be strong as a whole, shaping up really nicely, I think, for a breakout candidate going into potentially next week, holding support, at least as of right now, still below resistance. Still think we probably need to see something that looks like this break before we get too terribly excited. You also have one of the newer additions to the S&P 500. Lados kind of knocking on the door of a little bit of a breakout as well over in this space. Lockheed looks a little bit more like a pullback to me than maybe LHX, but certainly still quite a bit of strength over there. GE continues to just to struggle. We came off our low, but pretty much most things we look at today had a pretty nice green candle, right? Then you look at poor GE and it's, well, we came off the low. That's what we have to hold our hat up for. So nice floor is developing here over on CSX as well, kind of hanging out, really undecided, gone very, very sideways since this big steep drop. Of course, we looked at Fedex yesterday. They, much like the rut, kind of stuck their nose very, very early in the trading day below yesterday's low, did rally up off of it, found resistance at that 9 EMA. Still thinking that looks more like a breakdown candidate to me than anything else. And of course, 3M, a little bit of a bounce back day after breaking. Boeing, I've been shying away from, but I know that is just me. A little bit of a bounce off of that 50-day moving average. I continue to stay away from newsy things as best I can. It's impossible to completely do it these days, right? But as best I feel I can, I try to stay away. And Boeing's kind of been off my list since the beginning of the year, and I think it has to stay there. I just wouldn't sleep very well at night, I don't think so. As we move into the staples, just another good solid day in the staples. We talked about Coke. We've got Coke in the reports this week, definitely hitting that entry point here today. But one thing we haven't talked about the last couple of days or last little while is Pepsi. And Pepsi certainly lagged way behind Coke for a while, but just like that, we've got Pepsi breaking resistance here today. Much like Coca-Cola, good solid breakout. PG also, we took a peek at them yesterday. They're a little bit of a breakout candidate as well. We didn't get a chance to talk our tobacco stocks yesterday, so let's talk them a little bit. Yesterday, big move to the downside on both of our tobacco stocks, Altria Group and Philip Morris, as sounds like they're thinking about merging. I don't think there's anything set up just yet, but they both bounced back pretty strong today. These might be areas, if you like to trade, I tend to stay away from these because they're weird. I see a break and then it fakes me out. I just don't like these stocks very much for whatever reason. I don't do well with them. I think even if that wasn't true, though, with this newsy type related things, as we've kind of talked about before. Welcome out, Linda. Great to have you. No problem. As we kind of talked before, when you kind of get this mergery stuff with stocks, weird things can happen. It doesn't always happen. Maybe even most of the time it doesn't happen, but you can definitely see some strange increase in volatility as it's going through, it's not going through. So until we get clarity, I think caution is the name of the game on these tobacco stocks, but certainly them merging, those are certainly two big names within the space. If we're looking for a bearish breakdown candidate, I think Walgreens Boots Alliance is certainly an interesting character for that discussion, at least. Holding out at support here today, looking at these guys on a longer term perspective, they don't really have a whole lot to hold them up until we kind of work back down. As you can kind of see, we have some old resistance and old pivot back here around 44, 44.50, but really not a lot between here and there. Support, again, it holds here today. Maybe it'll continue to hold, but certainly an interesting name, I believe, for this base. If you kind of squint your eyes a little bit, it kind of looks like a little bit of a reverse cup and handle that is formed with our cup right here and our handle right here. Not the prettiest example, I know, but certainly knocking on the door of support. Saw some nice little movement in Walmart this week as well after kind of struggling at resistance, a little bit of upward movement on Walmart. Costco followed through pretty nice early in the trading day off of that big break yesterday, but as you can see here, really did come off of the high right at $300. Those psychological numbers can definitely get in our heads. Good volume. Definitely think we keep these guys on a watch list going forward from a bullish perspective, but going to need a little development. Like to see this 9 catch up a little bit, if nothing else. So staples, for the most part, yeah, you see a breakdown candidate in WBA, and I'm sure they're not the only one that would fit the bill out there. But for the most part, we're seeing a lot of strength, and we continue to see a lot of strength. Of course, one of the more defensive areas in the market overall. Still got a little bit of room to go before we break resistance, but a great candle. Been showing a lot of strength as of late. Certainly one of the, the only real non-super wimpy area that, from a bullish point of view, that I feel comfortable with. Yeah, I feel comfortable with utilities and REITs because I'm a wimp, right? So surprise, surprise. But I still continue to feel pretty confident and comfortable with what's going on over in the staple sector as a whole. And no problem, Elka, you'll get another opportunity, whether it's on Coke or whether it's right now or not, my friend. It's not about what you don't trade, right? It's about what you do. That is for sure. Utilities, a little bit of a pullback coming off of their lows here today. Would like to see maybe, one more day of pullback and then a doji on Friday. So we had some nice pullbacks in utilities going into next week. I don't know that. I think that might be asking a little bit too much, but a little bit of selling going on, a little bit of profit taking, 2 back-to-back red candles, lower high and lower low today, still above everything, still very bullish on utilities. Maybe a little bit of a pullback would be nice to see. But again, we're hitting highs. We were hitting a new high yesterday. So how bearish can you really, really be? Healthcare holding support here today. I continue to dislike healthcare, but we did hold support, and that is just me. Not everyone's going to agree with me, and nor should they. But we did hold support, much like the market. We're still within this range. We did see a bounce back day on our healthcare plans that we've really seen. Whoops. Guess it helps if you do the right ticker symbol. There we go. Bounce back day, but boy, they've been showing a tremendous amount of weakness. There are some interesting things going on out there in this space if you like it or if you're aggressive. CVS, for example, after popping on earnings, pulling back, kind of filling the gap, or popping up pre-earnings and then popping on earnings, I should say. They had kind of 2 pops there. Nice run, pulling back, sitting on that 20-day moving average. It's early in the game for sure. CVS has certainly taken a beating as of late, as you can see looking at this weekly chart, but definitely subtle signs of reversal going on in CVS after a lengthy sideways and even lengthier downward trending market. You've got AbbVie, if I'm not mistaken, another interesting name. But let's go to the weekly chart so we can get a little perspective here. So the big pullback to the downside, as you can kind of see, I'll just zoom this guy out. This zone of support has held, was a pretty big breakout point back in the day. Had a heck of a run. AbbVie is capable of some pretty good movement both ways, but we had a little bit of a break. I think at least a lot of people, I thought it had broken to the downside, at least per my rules, but has long since faked me out on that end. Broken back above the 20 and the 9 EMA, a little bit of a pullback here. Still think this is very aggressive, way too aggressive for my tastes. But if we could see some upward movement and a break of resistance coinciding with the break of the 50-day moving average, there is kind of a bit of space here between this line in the sand, which we should respect in my opinion, but really up into 75, into these old lows, this last breakdown, there's not a lot of resistance. It's certainly an interesting character. I saw, Ilka, you went ahead and got some boomerangs going on. Got to like the stabilizing that we're seeing in Pfizer. I still like to see it break above resistance. I don't think it's done anything yet personally. That doesn't make me right. I'd feel a lot better if I'm a bull if it broke above that resistance, or if I'm a bear if it broke below the support, but developing a nice little sideways action going on. So there's like actually some pretty interesting charts. Merck, of course, knocking on the door still of a potential breakout as well. There's some interesting things. I just have not liked the price action. And I know that is just me, and you guys may not, may be seeing things a little bit different. And that's, like I said, that's perfectly fine, but I still shy away from it. But if we can spend a little more time in this range, maybe let some of these setups develop, there are some interesting things, I believe, developing potentially over in the healthcare space. Over into the discretionary, of course, first things first, Amazon holding support here today, still doing that dance on that 200-day moving average. We dip on the intraday, we close by the end of the day above it. Certainly worth watching whether it's a trading candidate or not. Amazon is, of course, a big part of anything it's in. Home Depot and Lowe's both had great days here today. Huge green candle, beautiful green candle over on Home Depot. Same with Lowe's. Lowe's a nice bullish engulfing candle, eating up all week and Friday as well, gobbling up quite a bit here on Lowe's. Saw a good bounce over on TJ Maxx. Nice knocking on the door of a breakout. I think you could at least argue that that's a breakout candidate over in Target. Even on some of the things like Urban, that have, we've long since, well, we know how they've performed as of late, but a really good bounce back day. And for the first time in a while, kind of reclaiming some of these moving averages, showing a little bit of strength. XRT, the retail ETF that we looked at a couple of weeks ago, testing that long-term support level, big bounce back day here today. Another slew of earnings with Dollar General and Dollar Tree and Best Buy here tonight. So we'll see where these guys take us PVH tomorrow. But you gotta like this relative strength. I believe that we're seeing in the retail. If the market was a little more behaved right now, I think this might be a really fun place as an aggressive trader. Starbucks continues to trade in this range, but holding up. We're kind of creating some higher lows here. I'm going to zoom in on these guys into maybe a 2-hour time frame here. These guys have gone very sideways with just a subtle hint to the upside. Still like Starbucks personally, still waiting for it to break above that resistance level. So still seeing quite a bit of strength. We even saw McDonald's, people coming in off of that. I don't like pullbacks like this. So unfortunately, I guess it wasn't me, but nice upward movement. We're seeing some good movement. I really do feel if the market was stronger, and it's not, so who knows if I'm right or wrong, and really who cares, but I really do think if the market was a bit stronger, we could be seeing some really interesting things. So that's going to be going into the back of my brain for when things settle down in the market, wherever that might be. I'm really liking the strength. And if I take myself out of the broad market, which is foolish to do, in my opinion, big bullish engulfing candle. Overall, I believe at least a good round of earnings in the retail space. Strong top, Home Depot, McDonald's, Nike. I mean, these things have held up nicely. Certainly an area worth keeping an open eye to. But again, with the broad market being where it is, I think it's really hard to sell me on putting, making a firm stand one way or the other. Over on the real estate side of things, just a little bit of a candle here today, not much, still holding that 9 EMA, much like utilities. Pullbacks, I think, should be greeted with smiles on our faces as opportunities to get into some strength. Certainly continue to be comfortable with the more defensive areas of the market. Got into a little bit of a sideways range. We've seen this before in real estate. I mean, historically speaking, REITs aren't the most volatile bunch of things. So maybe we can spend a little bit of time here. But again, it's very, very strong overall. And over in the communication services, much like the broad market, holding support smack dab in the middle, well below resistance, has some work to do before we can go anywhere. We do have a little bit of a potential pullback opportunity, in my mind at least, developing over on AT&T, breaking out, pulling back, testing that 20-period moving average. Netflix is the stock of the week. Coach Noah's got a special surprise for you guys over on the Tackle Trading Instagram. So if you haven't had a chance to check that out yet, I definitely head over to Tackle Trading's Instagram. A little bit of a bearish pattern developing on Netflix. Coach Noah will talk you through what he's seeing over there. Did see some selling in our video game stocks here today, most notably EA. Down pretty big here today. Verizon continues to show some strength, much like AT&T. Nice strong candle here today, a little lower volume than yesterday, but pretty strong movement, very much within a larger range. And of course, the bigs, the ones who really matter, developing maybe into a pinch here, as Coach Mark would call it, and just a surprise, in case you don't know, I actually coined the term pinch. Mark just ran with it, and so he can have it. But we were talking in my kitchen one day. Mark used to come over in the morning, and we talked trading in my kitchen, and that's where we came up with that one. But we're developing a little bit of a pinch right now between the 50 and this falling 20. Kind of a complicated chart right now. Probably need a little bit of development, but holding up, and such a big important part, bullish or bearish, to the XLC ETF. Facebook holding its own up here today, but a much weaker chart, at least in my opinion, than we are seeing over on Google right now. Aggressive traders, I think you could maybe argue they got in bearish today off of yesterday's very bearish looking candlestick. Hershey's, another good one over in the staple side. Great call, Ilka. Hershey's is a juggernaut. Just doesn't care what's going on in the world around it. Breaks on Hershey have been very good to traders as of late. Well, hey, let's just say being a bull has been very good to traders. And shout out to IME. I'm not sure if you're here with us, but IME was all over this. After they had their initial response, they gapped down on earnings and really fired back up throughout the intraday. IME was all over this right out of the gates on that break. So shout out to you, sir. That was a great call on your part. So some pretty nice looking things over again over in the, hey, I'm always going to find a way to buy a can of Coke when I need one, or a Hershey candy bar. I'm going to be buying Hershey on them for a long time. It looks like so, but great call there, Ilka. So that is where we find ourselves sector wide. Big story of the day, I believe, is support holding for another day on the things that that was testing the Russell, the industrial sector, the financial sector, these areas that were at clear levels of support and very important price points, at least in my mind, holding up here today. Got to give that to the bulls. But before we get too crazy, I think we have to respect that where are we at in the market? We are right smack dab in the middle, the same place we've been for the last several weeks. At any given day, it's one heck of a ride. Continued to be very volatile. I'll maintain that still liking from a bullish point of view, focusing on the more defensive components of the market. Still think from a swing trader's perspective, it is a difficult market to trade in. Cash flow continues to be king, especially if we're building around the range on the broader market. Taking a quick peek over at the VIX, not much to see here today. Good fire back off of the opening gap. So the VIX dropping down with us. We're still high. There's still a lot of fear in this market, and that's certainly reflective in how much we're moving in our charts. You look at the ATR, on the S&P 500, right now we're constantly, in the 40s, back, it wasn't that long ago, we were in the mid 20s, right? So volatility certainly is still there, hasn't gone anywhere, at least in my mind, as of right now. Interesting movement going on over in our commodities. Gold, not a whole lot to see here. A little bit of sideways action after its most recent attempt at breaking out, but just again, we're above everything. We don't have a lot of real resistance that can, really push us. I mean, anything could be resistance, but zooming back, this was kind of the last big one, at least to my eyes, and we've cleared that out. So continues to be very strong. I'll maintain that as long as it makes sense to you and to your portfolio design, I have no objection to what people are doing on the bullish side of things. Silver is just a monster right now. Just continues to run after that break of 1750, coming off almost hitting 1850 here today, coming off of the highs. Certainly feels a little extended, but that doesn't mean it is, and that doesn't mean it can't keep up this just what a run, and pushing through. I mean, we've got some resistance, as we've kind of talked before about where we topped out here today. A little bit of old history, old resistance. I don't expect that to be enough to stop this momentum. This momentum might stop, but I don't think it'll be because of our little price action that we had at 1860 a few times back in the day. Silver, as you guys know, can move, and certainly it is very, very strong. Bears beware, again, I guess, when it comes to silver right now. Over in natural gas, tried on the intraday to break that 50-day moving average, another pinch developing between that 9 EMA and that 50, and even, to add a little fuel to the fire, not just the 50, but the 9 weekly EMA as well. Continues to be a big battle. I still think we need to close above resistance before we can talk, but you have to respect the slow but steady upward movement we have seen coming out of this huge downward trend. So got to keep an eye on that 50. I think of close above the 50 is the bare minimum that the bulls need if they're not already in, and they were much more aggressive than me if they already are. But gotta like that reversal, especially if we can claim these averages by the end of the week. Close above the 50 daily, a close above the 9 weekly, 9 EMA weekly. Those I will interpret as bullish signals. We'll have to see. I'm not sure that I'm all that excited about trading it. That's not really my style. I'm not, you guys know me by now. I try to go into strength. Give me a Hershey any day of the week over a reversal pattern. But that, again, that is just me, and that is my personality as a trader. I know that not everybody thinks that way. So that's where we find ourselves in crude. And lastly, over in natural gas, over in crude, nice pop on the inventories here today, working right back into that trend line. I think this is best suited to look at a weekly chart to truly understand where we're at on crude. And nobody seems to know, is what that chart tells me. I don't know what we would call this drawing, but certainly we are continuing to trend within these upward trend or these two trend lines. Got a lot of stuff on both sides. Right now, again, I don't think this is a great swing traders environment. Personally, I still believe it's a good cash flow environment. I still believe it's a great intraday environment. Swing trading, back and forth, very undecided. You could argue if we can close above, this trend line here, you could argue that's a bullish signal, and I would agree with that. I just wouldn't argue that it would be a great directional trading signal. But I would call, break, maybe close above the 50 to give us some nice clear clarity there, a little bit of a bullish signal. Still think though that this is a cash flow area or an intraday area. There are easier things to be working with: silver, gold, staples. If we want some bulls, we've got them in certain areas of the market, and I don't believe that crude is there. I think the only real clear signal that I could see developing on crude that could interest me would be a break of the trend line and this swing low at 52.80. That could interest me personally from a directional point of view, because there's nothing. There's just clear air. Everything else, I just think is going to be really hard from a management perspective. Lots of little things, very sensitive to trade war stuff, very undecided even beyond the trade war stuff. So crude just going to continue to be on one of these days. There will be a great directional trading signal, and hopefully I'll be there to make a call when I see it. I plan to be. So hopefully I am. So that's where we find ourselves, ladies and gentlemen, after a good fire back in the market. But again, if you believe that this is anything other than just another day at the office, you might be right, but I don't believe that. Still in the range. We've got to come out of this range. I expect anything's possible tomorrow. Giant red candle, giant green candle, neither would surprise me, to be honest. But until we're out of this range, I think we have to tread lightly, as many times as many of you guys are already doing. Many of the other coaches have said, fairly neutral in our deltas. I believe it's fine to have a little bit of a skew one way or the other, but overall fairly neutral in our deltas, and leaning on theta trades while we're in this range. As long as we build out, kind of with this range, there's been some movement and certainly things happen. There's no doubt about that. But overall, we've been fairly consistent within this trading range. So, ladies and gentlemen, that'll do it for the market recap for today. But as always, certainly appreciate everybody's time. Great to have you here. Thank you for joining me. Be sure to head over to the Instagram page. Check out Netflix. Coach Noah is always doing some good work over there. We've got our bear market survival guide for our bear market team. So if that is you, enjoy that here this evening. Just a couple more days of this week, and of course the short week next week with the Labor Day holiday. So we'll be on a 4-day trading week next week. A little bit dip in volume today. Maybe we'll just kind of chill out for going into the holiday. Man, that'd be okay for theta trades, I think, but I don't know. This market, I think that's asking a lot. So if you are new to the channel, of course, thank you for joining us. And we always encourage you to hit that subscribe button, that notification bell, like, share, all the YouTube stuff that the kids say. Of course, we're active on all the social media, including Instagram, Facebook, and of course, Twitter at Tackle Trading. You can, as always, find me at Frank Martin23 over on Twitter as well. So thank you, Whitney. Thank you all very much. As always, it's my pleasure. Thank you for joining me. Thank you to those of you who catch the video a little bit later in the day. Hope you have a great Wednesday afternoon. We'll pick up same time and channel here tomorrow, and one day closer to getting a webcam. We'll see when Amazon gets it to me now. So, but we've got the ball rolling, and while it's still a little weird to be doing this on the other computer, I'm liking it. I'm just not used to it yet. So I think I'm going to be happy for finally retiring my poor old 12-year-old laptop when it's all said and done. So thank you, Ilka. Thank you, Patricia. As always, guys, this is my pleasure. You guys have a fantastic Wednesday. If you're heading to the Bear Market Survival Guide, going to have a great time there, I have no doubt. I will see you all same time and channel here tomorrow afternoon. So thanks, everybody. You guys have a great evening, and I will see you tomorrow. Bye now.